Let's look at doing velocity banking when we have a negative cash flow. Their income is $4,284. Their expenses are $5,054. This means they're negative $770 each month. Now, they were expecting to get a pay increase of $2,800, but unfortunately that's not going to happen yet. So let's see if we can use velocity banking to fix this problem. We're going to redo these numbers here. Since the pay increase isn't happening yet and we're negative $770, we're going to have to go through and eliminate some of these expenses or maybe lower some. So I would take out the lawn care. I would lower some of the food budget if we can. I would take out these two expenses here, and I would try to lower all of these medical bills here. I would call them and say that you're struggling to make the payments, see if they can arrange a lower amount for you. A lot of times, if you're paying a medical bill, they're really willing to work with you. And then this affirm payment should be paid off in a couple months, so that will free up an additional $50. So this budget is after we took out those expenses or lowered some of them. Like I said, we lowered the food to $600 per month. I know that's really difficult, but it can be done. We're gonna look at velocity banking using that lower income number. So the income now is $4,284. Their cash expenses are $1,985. Remember, cash expenses are anything that cannot be paid with a credit card. It's something that has to come directly out of your bank account, either with an ACH transfer or you pay it with your debit card. This leaves $2,299. We paid this full amount to the credit cards. Then we wait for the credit card statements to close before using the credit cards back to pay the remaining bills. Once we pay the credit cards, they're going to take out some interest, let's say $469 for interest. Now this means we've paid $1,830 to the credit cards that we can use back for those other bills. Now, before we lowered or eliminated some of those expenses, their total bills that they need to put back on the credit cards were $2,356, which would mean they're still negative $526, or the credit card balances would be going up $526. But if we take out 75 here, 200 here, this 50 will be going away. If we can lower some of these and get rid of a few expenses here, we should be able to get to the point where we're very close to breaking even on those numbers. Remember, this was before we went in and eliminated some of those expenses. So we need to eliminate at least $526 out of the budget. Now let's assume that they were able to do this. We're gonna go through and look and see what each paycheck is going to look like. She gets $1,442 every other week, and then the kids pay $350 each every 2 weeks. So week one, we get $700. We're probably going to have to pay this with this money here. So we take out $120, $13, $2, $270, and $100. Now, a lot of these bills can go back on a credit card, but we'll have to pay the credit card first. And with the bills in the beginning of the month, we use a credit card that closes at the end of the month. So we won't be doing this until month 2. So for now, these expenses here are all going to be cash expenses until the following month. So we take out $120, $13, $2, $270, and this leaves $295 that we have left over to pay to credit cards. Remember that we also have to fit food and gas in here somewhere too. This budget is going to be very, very, very tight. So we could use a little bit of this for food if we need to, or we could pay the Care Credit, the American Express, and the Credit One. If you're paying the credit cards with this amount, this is what I would do. Pay the minimum on the Care Credit, the minimum on the American Express for now, and then I would pay the additional $41 to the Credit One, which is just a little bit over the minimum. The Care Credit, we paid $108, and we're not going to touch that card. We could use this later in the month, depending on whether we can use that for some of the medical bills or prescriptions that we need. The American Express, we paid $146 to it. They're probably going to take about $108 for interest, which would mean we only paid the balance down $38. We may be able to use this American Express to pay this medical bill due on the 12th. Now, in this case, the statement probably hasn't closed yet on that card. But when the budget is really, really tight like this, sometimes the first month you won't be able to wait for the statements to close. So we've paid all these bills here with this $700. We paid the Care Credit, the American Express, and the Credit One. Now we get another paycheck on the 9th, which is $1,442. Remember, we go through and find any cash expenses, which would be the student loan, the affirm, and the mortgage. So those all have to come out first. $1,300 for the mortgage. This only leaves us with $67 for this paycheck to pay towards credit cards. Now we have one credit card due that we haven't paid during that pay period, and that's the American Airlines card. We only have $67 to pay this. Unfortunately, what we'll probably have to do is pay this $67 to that card and then pay the remainder of it after we get paid again from the kids on the 16th. It's going to be considered a late payment. It's not going to report to the credit bureau as late until it's up to 30 days late. So if we pay $67 with this paycheck here and then pay the remainder here, you'll get a late payment charge here. But as long as you go in and pay it on the 16th, that will not report on your credit. Now we get another $700 on the 16th. Let's look at that. Now during this paycheck, we don't have any cash expenses, and some of these bills can be put back on a credit card. This Netflix bill here can probably go on this Credit One card. The Credit One card will probably close on the 16th or the 17th, so that could go back onto that card. So that's probably going to bring that balance right back up to where it was. The balances on the cards are going to go down, and then they're going to go right back up because we don't have positive cash flow. Increasing the income would be one way to fix this, or cutting back, but unfortunately, there's not a lot that we can cut back from. So we get the $700 here. The Netflix can go on the Credit One. So we might just pay the AT&T a couple days late after we get this credit card paid and after that statement closes. So we don't really have any bills that we have to pay with this money. So we still have $700 left over that we can pay all of that to credit cards. I would pay $300 to the American Airlines, $30 to Home Depot, which again, that's a minimum payment, but we're not going to use that card anymore. So that balance will be going down a tiny, tiny bit. I would pay $170 to the Quicksilver card, and I would pay $200 to the Saver One. Now we've spent all of that paying the credit cards. So remember, we paid this $67 here to the American Airlines card, but then we also went in and paid another $300 to it. So we did pay a little more than what the minimum was. The Credit One, we paid $41, and we put the $18 Netflix back on that card. The American Airlines, we paid $367. Remember, they are going to charge a late fee and interest. We'll probably have about $160 left to spend on this card, which we can use this, hopefully, to pay this water bill. Now, same thing with the AT&T. We might have to pay this water bill late, so you might have to call them and see, can you get on a short-term extension to move it out maybe sometime the following week? That way you're able to use this card after the statement closes. The Home Depot, we paid $30, which was the minimum, and we're not going to use that card anymore. It also looks like I forgot this Prime card, so we would have to take $68 from one of these to pay the Prime card as well. The minimum should be a lot less than $68 if the balance is only $116. But again, we would pay whatever the minimum is, and then we wouldn't spend anything back on that card. So we're paying the Netflix with the Credit One. We're going to pay the water bill after we hopefully move that out to about the 23rd with the American Airlines card. The AT&T was another bill that's probably going to have to be moved out. Luckily, AT&T is pretty easy to move your payment out a couple weeks if you need to. We could pay that with one of these cards here. So then we get the next paycheck on the 23rd, $1,442. We only have one cash expense here, which is a loan payment of $600. So we subtract that, which means we have $842 to pay to the credit cards. Now the credit cards due during this pay period are the Quicksilver and the Saver One. Remember, we already paid a little bit to each of those. We paid $170 to the Quicksilver, and then we'll probably end up paying about $130, because remember, I forgot about that Prime card, to the Saver One. Then we can add more of a payment once we get this paycheck here. What I would do is go in and pay $442 additional to the Quicksilver card, and then the other $400 to the Saver One. And same thing with the AT&T, the water bill. The car insurance is also probably going to have to be extended out if you're able to do that. That way it can be paid with one of these cards here. Now we've paid $612 to the Quicksilver card. They're probably going to take out about $20 for interest, which means we have $592 left over to go back in and pay those other bills. So we could pay the AT&T, the car insurance, the Prime here, the medical, and hopefully we were able to lower these dental and ortho here. But those should all be able to be put on that Quicksilver card, and preferably after the statement closes. Sometimes it's hard to have the payments line up exactly how you want to, especially in the first month when we're working with very little cash flow. But that will start to make more sense as the balances on the cards decrease just a little bit. And then when we start using these cards down here to pay the bills at the beginning of the month, that also is going to help. And then let's say we paid about $530 to the Saver One card. They're probably going to take out about $95 for interest, which would mean we have $535 to pay bills with this card. Now remember, we still have to add food and gas somewhere into this budget too. The first month is going to be extremely difficult. We will have an extra $700 here that we can use for the next month because we're going to use this card now to pay these bills here. So we won't have to use this $700 to pay those. So we could use that for food and gas, or maybe to start paying those credit cards early. So remember, with the card that closes at the end of the month, we had $535 that we can use back on it that we freed up. which was this Saver One card here. Its statement probably closes somewhere around the 31st or the 1st. So we would put the HOA, the Walmart, the resume, the electric, and hopefully the pets back onto that card. I'm really hoping that they get the pay increase, which would add another $2,800 to their income, which would really help this situation here, because right now this is going to be very, very difficult. These credit card balances here will probably go down slightly because we're paying the minimum, and the minimum usually covers the interest plus a couple dollars, especially on lower balances like this. Now these cards here, they're probably going to go down and then they're going to go right back up, because remember, we were negative $526. So even if we cut out $526, that still puts us at zero. So the balances won't be going down much unless we're able to eliminate more than $526. But even if we eliminate $600, the balances would still only be going down $74 per month. So with the same numbers, remember when we very first started before looking at velocity banking, we were negative $770. Then once we did velocity banking, it freed up an extra $200. And that's because we're trying to eliminate some of the minimum payments on the credit cards, which in this case, their minimums are $713, which is about what they're negative. So if we do velocity banking in combination with eliminating some of these other expenses, we should be able to at least break even. But when we're in this situation here, you really have to pay attention to exactly what is going back on each card and do not do any extra spending that is not accounted for in your budget. Hopefully doing velocity banking for now can hold them over until they are able to increase their income or decrease some of these expenses. But it's not going to be easy. It's going to feel like the balances are going down and then they're going right back up. Just make sure for right now that the balances on the credit cards are not getting any higher than what they already are. Remember, when we get paid, we take out cash expenses first. We pay anything left over to the credit cards. Hopefully we're able to wait for those credit card statements to close before we go back in and put the other expenses back onto the cards. But again, hopefully by cutting some of those expenses and doing the velocity banking, we fix this negative cash flow problem here. I always think one of the easiest ways to plan this is by using a planner. That way you can budget each one of your paychecks. You should be budgeting monthly and every time you have money coming in. Also remember to go through and find your statement dates for all of your credit cards. What I do on the planner with those is I circle them. So this American Airlines card, maybe the statement closes on the 18th. I would circle it and put an AA next to it so I know which card closes that day. The American Express, maybe it closes on the 15th. So I would put a little AM next to that. That way I know which card is closing. And I would do that with all of the credit cards. That should help you plan which bills are going back on each one of your cards. These are all just things that you have to look at when you're doing velocity banking. It does take quite a bit of planning, but it can fix that negative cash flow problem. And as always, let me know if you have any questions about velocity banking, credit cards, credit scores, paying off debt, or anything else.